All right, I'm going to talk about securities tokens. I have a lot of content to go through, so I'm going to go through it pretty quickly. I'll talk a little bit about programmable money. Bitcoin is basically programmable money, which is one of the many things that makes it very, very interesting. And I think that we're going to enter a world where we have programmable securities. And what a security is basically is an agreement. And it's an agreement that can be tradable. So if I say, I'm setting up a new business in Austin, and you give me some Ethereum or some Bitcoin or some dollars, and I give you 10% of the revenue or 10% of the ownership of the equity or whatever, that's an agreement. And then if you take that, that could be a piece of paper, we can make that right here. We can make a security very, very, very easily with a piece of paper. And then if you trade it, and then it becomes a security. So it's very, very easy to make a security. They're very important in the functioning of the overall economy. I'm going to talk a little bit about why I think this technology is a fit for securities and how I think it can change the world. I started in my interest in the investment business started a long time ago. My mom was a stockbroker starting in 1977, so I grew up on the floor of the brokerage firms. I was playing with reading through the pink sheets when they really were pink sheets, and I played with the Quotron computer. I bought my first stocks at 9 and got my first job at Dean Witter when I was 14, and then I got my Series 7 at 19. And I've been doing something like that ever since. So 27 years I've been governed by the SEC in some form or another. And I got into crypto about 6 years ago. There's a lot of common objections. I'll get to some of these things. I think there's some fundamental misunderstandings about why this makes sense. So I'll talk about these kind of things. So first of all, one thing that's important is securities tokens are not cryptocurrency. A lot of times it's easy, and I even do it. I just say, yeah, I'm interested in cryptocurrency, and I kind of have that as a broad thing. Really only a few of the things that we call cryptocurrency are really currency. A lot of things aren't even trying to be currency, and securities are different than currency. And a lot of people have said to me, hey, you're a you're a Bitcoin person. I'm surprised that you're interested in securities tokens, and that's sort of bizarre. And I know there's some Bitcoin super maximalist type folks who don't believe in securities tokens, and that to me is just fundamentally baffling, because securities are a thing and they're part of the world. They're a third of the global economy, and probably more than that once they become tokenized and easier to trade. So if you're envisioning some world where, okay, Bitcoin takes over the whole world, all the currency and all the businesses too, like we're not going to have Apple, we're not going to have Microsoft, we're just going to have Bitcoin, that just doesn't make any sense, and it's completely and totally fundamentally flawed. So while some of these people are very right on money and they understand Bitcoin well, they don't have an ever-loving clue about how the real world works, and they haven't even thought about something as basic as business. Do you think businesses will exist in a post-Bitcoin world? If Bitcoin becomes the global money reserve, will there still be businesses? Will Bitcoin replace businesses? Of course not. So they can live side by side, and the thought that one is competing with the other is shows a childlike understanding of the economy. And surprisingly, many so-called big minds in the Bitcoin ecosystem think that. So you want to look at what these things are. They're separate. Thinking about what a digital asset is. Is it a currency? Is it a company? Is it a utility? Is it a scam? What is it? And that comes to looking at the terms. So I won't spend much time on this, but I designed this simple tool that helps people look at that and say, here are some things that you can look at if you're analyzing a digital asset. And you'll notice number 2 there, what are you getting? Participation, this is just a simple acronym. 10 things you can look at: security, participation, accounting, community, all of these kind of things. But number 2 is important. What are you getting? What is the token? With a lot of the 2017 class of ICOs, what you're getting is a hope and a dream and not really much. With a security token, you're getting a piece of a business. Now, that business may fail or not. Another thing that people have said is, do you think securities tokens will be good? Should I buy some? Well, no. Just because the concept is good, you've got to look at each individual security. It's like saying, hey, should I buy businesses? Or I heard agreements are good. Bill Gates made some big money on agreements. Should I buy agreements? This just doesn't make any sense at all. And you're going to see a lot, as stupid as that sounds, you're going to see a lot of people make that mistake. Oh, securities tokens, $40 billion thing, or $40 trillion perhaps, let me jump in. So this method can help you figure out exactly what it is. Is it utility? Is it, you look at these methods and you can go through these 10 things, rate everything from 1 to 10, or I'm sorry, from 0 to 10. So if you say security, okay, Bitcoin is very secure, let's give that a 9. Everybody's opinion will be different, but at least you have kind of a somewhat common ground that you can rate things in and how you weight these things. So it's important to figure out what you have. So I mentioned what a security is. It's basically an agreement. This is the SEC definition. It's very broad in the United States. This covers, and this influences quite a bit of the world. The U.S. law has a long arm. Any country that's serious, typically likes to have participation from U.S. investors, so they would fall under this definition. Very, very, very broad. If you simplified that all, or we're looking at it from a dictionary standpoint rather than a United States legal standpoint, you'd probably come up with something like tradable agreement. So pretty much anything like that with money involved. Securities are legal in the U.S., and securities tokens are legal in the U.S. There's a lot of confusion about that. There are many, many ways to legally issue a securities token. A lot of people, are scratching their heads saying, oh, if they would just give us some more guidance. Those are usually people who don't understand things, and they don't know, and they're looking for mother government to come and save them. But the laws are already here. There's already many, many ways to do an exempt offering, or you can do a fully registered offering. Apple is legal. If Apple issued a token, then they could issue a securities token if they complied with the law. It can be done. Let me talk a little bit about how this whole thing started and what some of the parallels are to today. In 1602, the Dutch East India Company was the first publicly traded security. At that time, the way that you financed your shipping was you would take basically the equivalent of around $300,000 in today's dollars to finance a shipping expedition. And you'd send it out and hope that they didn't get sunk or robbed by pirates or something else. And you'd hope that sometime later you'd get your money back. And that's how it worked. It wasn't a very good system. By today's standards, we say, that doesn't seem that great. So somebody got a brilliant idea, which was, well, hey, wait a minute, maybe we can share this risk a little bit. Instead of you taking 300,000 and you taking 3 and you taking 3 and sending it off, and maybe one of you loses, why don't you all put it together? Which is really, really brilliant. I mean, that's like a Satoshi level kind of brilliance. I'd love to figure out who it was who actually figured that out. It sounds simple now, but pretty cool. So they had 1,100 people put in the roughly 300 grand, and they had more capital than any company had ever had in the history of the world, because nobody had ever done that before. Nobody ever pooled their money together. The peers, or the group, was much stronger than any one individual could be. Common theme. Worked. Became the largest company the world has ever seen. Dominated trade, had armies, did a lot of evil things, a lot of bad things, but certainly from an economic standpoint, you can't argue the significance of it. Here it is compared to modern day companies. There's Apple down there on the little one. There's what Dutch East India Company be worth in today's dollars. Here's an even better slide. Dutch East India Company is worth all of these companies combined. Apple, Google, Facebook, Microsoft, and so on. So it did something profound. Why? Because you were able to trade these agreements in a way that you couldn't do before. That's what we're going to do again. This system worked. It became a thing. Stocks are a thing. They are today. Everything you see is represented by stocks. You interacted with companies and securities probably 50 times today, and it's only 9 in the morning. This is AT&T is a company. The hotel is a company. There's probably a dozen different entities. I doubt this is like actually owned by AT&T corporate. It's probably got different arrangements and the management. And then if you got a bagel or something like that, the water company, all the vendors, every single thing, even a tiny little solo person selling newspapers is a business and a security. Most of them aren't traded. Your typical local hot dog stand is not publicly traded, or not traded at all, and maybe not only has one shareholder. But the concept works. It makes a lot of sense. So these securities, after Dutch East India Company grew, they trade in many forms. They were bearer assets. The one on the right is fake. So there were securities that were not even, they don't all have to be equities. It doesn't have to be a stock. As I showed in that SEC definition, and when I mentioned, kind of my definition, which is tradable agreement, it could be anything. It could be a bond, it could be a share of future revenue, it could be all kinds of things. When in doubt, it's a security, and when in doubt in the United States, comply with securities laws. I'm not a big fan of regulations in general, but having been governed by these rules for a very long time, I recognize very quickly that this isn't something you can very easily cypherpunk around. I wish there was. If somebody has a way, you can, but the law is the law, and it's not going to likely change. It's been the law for 85 years. It's not going to likely change. The good news is it's not necessarily that hard to comply. Even for a huge publicly traded company, it's like $1 million. Now, it's a lot of money for some people, but it's no big deal for a big company. If a major company wanted to do a tokenized security, it would be probably comparable to the work that they do in interacting with the New York Stock Exchange and everything else. So, certainly significant, but it is doable. And it's also doable, as I mentioned on that first slide, for small companies. So when you had all these stocks come along, all these tradable agreements, bonds, all of the other things that came along with it, it gave rise to markets. People want to trade this thing. People want to figure out what stuff is worth. There's always going to be price discovery. So what are markets? Basically, it's just people trading these agreements. I can make an agreement right now and have that thing where I say, you give me something, I give you 10% of whatever, and then we can trade that. The barrier to that has been the technology. It's hard to do that. If we can do an agreement, and what the structure that we have in this room, there's people in a room of all different range of wealth and background, some business owners, some investors. We could do securities and we could trade them between ourselves right here in this room. That's the way the world worked in 1602, and that's the way it worked for hundreds of years. The difference of what has made it more complex is scaling and capacity. It's easy to trade the stocks within a room. It's easy when you're under the buttonwood tree or you're, and then it gets a little harder when you start using chalk and you got to update the boards, and then you invent this amazing invention called a ticker tape, which helps you know what other people are pricing at, so you can trade with somebody across town. You just wait for the thing to come in like a Morse code and tells you what it's worth. So that grew and grew, and the markets grew. Volume increased. Here's a great picture. This is the Baghdad Stock Exchange after the United States invaded and bombed Iraq, and the Coalition Provisional Authority took over. These are stockbrokers in Iraq who said, hey, what do you do? The whole world's collapsed. You still have something worth something. Maybe $1 billion company, maybe the headquarters is bombed, maybe the CEO is dead. The market wants to know what it's worth, and the market's going to figure it out, even if it goes to whiteboards. So how does it work today? This scaling issue has been continual thorn in the side of Wall Street or anybody else who's been trading securities, and it's gotten more and more complex. A lot of people think it works this way. They think that you have on the top right there that you have a company and a database and some shareholders. They think that Apple has a database of shareholders. So critics who tell me, this won't work because a blockchain can't recognize a non-native database, they just don't understand how the world works. I'm sorry, they just don't, because that's not how it works. Apple doesn't know you're a shareholder. How many Apple shareholders, or any shareholders of any kind? None of those companies know that you own those shares if they're publicly traded. Apple can't even tell who their shareholders are. Have you ever gotten an email from your company saying, hey, I noticed you own Facebook stock. We got our quarterly earnings coming up. Maybe you should load up some more. Why wouldn't they do that? Well, they don't, because they don't even know who you are. They have to hire a consultant to do it. And the reason is because Apple can't possibly track the hundreds and hundreds of millions of dollars worth of shares that are trading every day. So the reality is they have to trust third parties to hold these kind of things. The volume is very, very huge. It's absolutely astronomical compared to the kind of transactions that we talk about on Bitcoin. It's a whole new thing, which is why technologies like Lightning and sidechains, some of these other things will be very, very important. I've tried to diagram this out. It's hard, it's complex, it's counterintuitive, it's weird, and that's why a lot of people don't understand it. Who owns you? How does Apple know you have your shares? If you have shares at Apple, you have 100 shares, and you sell them, and you buy them from Merrill Lynch, where does Merrill Lynch get those shares? How do they know those shares were good? Does Schwab call them up and say, oh yeah, they're good, trust me? Merrill doesn't trust Schwab. They think they share the database? Hell no. Schwab knows who their clients are. Merrill Lynch knows who their clients are. They will never share that database, and they're certainly not going to share it with each other. They won't even share it with the issuer. They won't even tell Apple who owns the shares. Apple calls up Merrill Lynch, hey, who you got owning our shares? Go pound sand. They don't know. They're not obligated to disclose that. So it's all these siloed ledgers. Merrill Lynch knows, but how do you know, if you think you have 100 shares in your Schwab account, how do you know they're real? I mean, if you have 100 Ether in your Kraken account, you know that's real because you can take it off and see it, and you can see it on the blockchain when it went in and all these other things. How do you know your 100 shares are real? Because Schwab says so? Well, that's not very cypherpunk, is it? Well, we just trust Schwab? What if they lie? Oh, they're not going to lie. Well, that's not a system. How do you really know? Well, they know because they have to go to these trusted third parties that they mention, and it's this very complex system. They use this company DTCC and everything, and it got more and more and more complex. You have Euroclear and all of these other things, and it's very, very difficult. And even today, it's still siloed by countries, and it just keeps getting more and more complex. By the 90s, this is what it looked like. So in the 60s, William Hack, the head of New York Stock Exchange, made this really, really depressing speech about how it was all doom and gloom and the world was falling apart. And he said that it was all because of this capacity issue. They couldn't keep up with the capacity, so they came up with the DTCC. And then they gave up entirely by 1996, and they said, we can't even pretend to know who owns what. We'll just put it all in one company's name. This one company will own everything in the world. It's called CD & Company. And they really do own it. It's not some phony thing. They actually own it, and they have these obligations to kind of give it back to the people, and it trickles down to Merrill Lynch's ledger and Schwab's ledger and so on. There's drawbacks of this. You don't really know what you have. Dole Foods was acquired. More people came in and said they thought they had shares than the shares existed. Big lawsuit went on about it. Other drawbacks. DTCC had $1 trillion flooded in a basement in New York in Hurricane Sandy. They had to go over to Jersey City by armored car. This was just a few years ago. And vacuum these securities out, $1 trillion worth, for 3 years. We can do better than that. And it's not DTC's fault. They're real smart people. They spend a lot of money on this. No system existed to solve this until now. This is the system that will solve it. This is a slide from a Bitcoin presentation. It works exactly the same. The system is already distributed. What we're going to do is decentralize it and get rid of the third parties. Because blockchains are really, really good for transferring something of value, and a security can be something of value. So you can make a security out of Bitcoin. I did it. It's a real security, and I'm going to have some news on it. It's worth money. I did it as a demo. Don't do this, by the way. Certainly don't sell anything like this. Anything I mention in here, when you get to the point where you're asking for money for something, talk to a lawyer. But you can create a security. I used a certain exemption. It wasn't sold to anybody at the time, so that makes it very easy. If you're not selling something, it's a lot easier. You can create a business out in the hall right now. If you don't sell it to anybody, nobody's going to care. As soon as you ask for money, that's a different story. So they're good for moving things around. This has been done on a bigger scale with Overstock, who announced in 2015 that they're doing this and been a pioneer in the field ever since. So they can be done. There's no question about whether tokenized securities are real or not, or whether they're going to be a thing. It's just a question of how fast. There's some problems with this, of course. You know, they're bearer assets. There's some issues to worry about. There are some regulatory clarity issues that need to be done. But the future is going to be incredible, because this is going to change the world just like the Dutch East India Company changed the world, and just like the internet changed the world. When I was a little kid playing on the floor in the stock brokerage firm, I had 3 channels to choose from. You know, I could watch Magnum PI or whatever, and I had 2 other channels. And now I can go on YouTube and I can watch a video about you know, the history of the DTCC or you know, the most obscure, narrow stuff. It's great with my kids. You know, they want to build a certain rocket out of Legos. You can find anything online, any interest. You can go into the most narrow, focused interest groups. It's a long tail. Technology has enabled it. It's going to enable it for equities and securities as well. Whole new systems are going to come up, things that we haven't even thought of or used much, like co-ops. Remember, any agreement can be tradable. And if we make the ledger easier to use, you can do all kinds of cool things like Welch's grape juice and some of these other things that are co-ops could be traded. You could have entirely new structures. Even with existing structures, you could have a very long tail where you could, I see a world where we're going to have 500,000 publicly traded companies. And in your 401k, you could have 2,000 publicly traded companies. You may own $100 worth of your favorite sandwich shop. You may see a tearjerker story about somebody in Syria, and you may invest $100 in their business. You may have somebody who has some stupid idea that's not going to make any money, but you love it so much you want to own equity in an artist's shop in Japan. And you'll be able to have price discovery because we have this global world, and people will be able to thumbs up and thumbs down, and you'll have systems where second and third layer parties can go and say what's true, and you know, are these accounted, you know, okay, here's these 15,000 securities, and they're certified by Ernst & Young as, you know, legitimate financials. Okay, good. I'm going to get a portfolio of 100 of those, have all little tiny holdings all over the world. And people will be able to bet on things. If the country is recovering from a war, you'll be able to instantly deploy capital. You can't do anything like that now. It's a completely ridiculous, antiquated system that closes at 4 o'clock at night because they need to get their computers synced up by 9 a.m. the next morning. It's not going to work anymore. The world is a new world. This is going to change it. So I've talked about a lot. History of securities, what a security is, how they trade, how markets work, how the rise of markets came about, and how this thing can change it. I think it's exciting. I think it's going to change the world. I think it's a big deal. I'd love to talk more about it. There's a picture of a farm up in New Hampshire that I think we'll call like Crypto Farm or something like that. I'm going to be doing a series of events. People come and hang out and talk about this kind of thing. And if you follow me on Twitter or anywhere else, I talk about this a lot. I care about it a lot. So I think it's a big deal. I think it's going to change the world. I think we should all get on board and get ready for a big ride. Thanks. We got time for some questions. Yes. Yeah, the question is derivatives being tokenized. Absolutely.
Check.
Anything that has value and is tradable can be tokenized. Even things that don't sound good at first, like art. It sounds stupid, right? Especially, again, going back to people who have had a tunnel vision about one and only one use of this technology. It's very easy to tokenize art. If it's, you know, it kind of has to have at least a little bit of value. You suppose it's $1 million, you know, rare piece of art. You can have a corporation buy that. We know that's legal. We know that's possible. Corporations do own art, 100%, no question. We know 100% that corporations can be tokenized. So even art can be tokenized. Definitely derivatives. That'll be first. There's a lot of people talking about art just because it's kind of cool. Derivatives will be there. I think the whole world's going to be tokenized. It's a superior method. It's a better ledger. Managing a ledger is a pain. If you manage it at small scale, it's a pain because you have a lot of responsibilities and you got to constantly update. At any kind of real scale, you know, most of the people in this industry come from startups. They don't deal with scale. When you talk about Apple level scale or derivatives trading, these kind of things, managing the ledger is a major problem. You need DTCC to do it, and you see the problems with that. With this, anybody can be able to issue something and have that item be a bearer asset that's tradable. So I think it'll happen a lot.
Bruce, I have a question. So, as far as tradability goes, that's interesting. But if I own a piece of this art institute in Japan that my ne'er-do-well friend wanted to open up, and he's going to make some money, but he's probably not going to make enough money to really be worth getting invested in. If he puts together this blockchain investment and he manages to get me and 1,000 of my closest friends to invest in his opening up this project, how do we profit? Is there a way that all the sales can go through the blockchain and then we all get our trickle down 1% of $5?
Yeah, I mean, it would be up to an issuer. An issuer could come up with any terms you can imagine. In your typical securities, I usually like to use equities as an example because they're very simple. Equities are a piece of a business. You're owning a piece of a business. And that's a real simple metric. You don't have to worry about any blockchain-y, tokenized thing. You just say, you own a piece. You own a piece of the business. If it's a good business, you make money. If it's a bad business, you don't. Maybe you don't care. In the example that I gave, usually people do care. You want to get a good business, have good metrics, use things like the spacesuit X analysis and other things to figure out if it's a good investment. And that's based on, that's why I'm kind of anti-token with a lot of these, ICOs that don't have any terms that relate to anything. Doesn't matter how well it does, you're not going to make any money from it. And most of them aren't going to do well, they're going to fail. But a business, you have real metrics. What's the cash flow? What's the balance sheet? These kind of things. And that makes a big difference. Yes?
How do you envision theft on securities tokens? How do you prevent that from happening, or what are the, backouts?
It's going to be a big challenge because you're never going to have a world where, suppose Facebook was publicly traded. There's no world that exists where Zuckerberg will take any chance at all, not even 1 in a million chance, that somebody's going to hack his shares and have legal right to those shares. Why would you do that if you were Zuckerberg? There's no way he would do that. So what you will need is, there's going to be a lot of different companies and groups that try and solve this. Some of it will be up to the issuer. You may have a very cypherpunk-leaning issuer who says, hey, not your keys, not your stocks. But that's not going to work for Facebook. It's not going to work for Goldman Sachs. And some users, frankly, I love crypto, but I hate moving crypto around, man. It's too stressful. It's just, I don't like it. And I haven't found any great solution. I've gotten better and better solutions, but there are a few different ways to solve this. At one end of the spectrum is not your keys, not your stocks, not your securities. The other end of the spectrum is you give us all your identity, all your information. We track it as it goes from person to person. Even if you sell yours, we track it to who it goes to, and we have the ability to seize that and revoke it all the time. Sounds crazy and sounds very, heavy-handed from a cypherpunk angle, but that's the way the world is now anyway. Apple can take your shares right now if they want, but they're governed by the law. It's not easy for them to do it. In fact, it's ridiculously hard for them to steal your shares. And a lot of these issues that people worry about with centralization, about, what if they just make new shares? Well, those things are already governed by law. So you don't have to worry about the issuer as much, but I think there's going to be a lot of different issuers and different structures. And I hope and would love to see the equities not have identity attached. And I can tell you it won't work if you have identity attached. So whatever country doesn't make identity attached, you can put it at a broker level, but you really need to let those things trade freely because it just bogs down the whole system. You'd go back to a central party. But what another solution might be is third layer providers who do insurance or something like that. So you can have a cypherpunk kind of coin that's not tied to identity and nobody can delete it and can move all around. And then maybe you have some other party where you voluntarily go and say, hey, here's my key, it's really me, here's my ID. And maybe they have some system, they say, okay, well, if you give us 3 or 4 multi-sig, we'll insure it, or something like that. The world's going to figure it out. It is one of the big problems. It needs to be figured out, though.
So, Bruce, I really like this vision of the world that trades with securities, but one of the things I'm always asking myself about is, how do we get from here to there? And I guess I wondered, who do you think are the first movers in this space? Are they, small businesses that trade penny stocks now? Are they Uber, somebody who's private? Are they some big player is Apple going to do it? Who do you think moves first?
That's a great question. I think, and I hope that it will happen simultaneously, because we do have the Goldman Sachs's and the Airbnbs of the world who are looking at this. And obviously you have a lot of, tiny businesses. Some ideas that people mention are frankly not great ideas, and they're securities. People say, oh, it's something new. Let me make something new on top of the new thing. How about I tokenize myself? I'm a musician, and that's a hard model, man. It's hard enough being a musician. It's hard enough to have a business model, and then on top of that, you want to throw this crazy blockchain-y stuff on it? I'm a big fan of just plain old equity. Hey, 10% of my business, 29.6% of my business, whatever. You just throw it out there and let people have real terms where they say, this is what you own and this is what it is. And so hopefully you'll see it from the big players and the little players. A lot of scammy ones too. Please, please, please. As much as I love securities tokens and talk about it, I believe it's going to be another ICO wave. You're going to have every clown in the world having, Jane's marijuana shop and Tony's VR shop and all these scammy nonsense products trying to raise money, because it will be easy to raise money and there will be demand for this. But you got to go back to the basic terms. You don't say, oh, here's a startup with 7 people and 2 engineers and an idea. Let's give them 100 million. Doesn't make sense. And it won't just because you blockchainize it. You got to look at it from the real terms. So hopefully it'll happen from a few angles. The cool thing about some of these scammy ones, they'll work. Some of the low quality and small ones will work. And some of the big ones will work. And hopefully the whole ecosystem will be built up.
So Bruce, once we have hundreds and thousands of security tokens and investors have all this choice, what do you envision happening in terms of being able to get at metrics and cash flow, be able to do fundamental analysis so that investors can tell the difference between high quality security tokens and scams?
The cool thing is that simultaneously there's this whole industry of AI portfolio management that's focused on this. And a lot of them aren't even in the blockchain world. But as this technology goes forward, there's also technologies with number crunching and big data analysis and AI, which kind of make it, the portfolio that I mentioned, having 2,000 stocks in your portfolio is hard. I used to manage 30 stocks, and that was hard. You can't really do it as a human, but a computer can do it. And if you will need some sort of uniform thing. That's why I mentioned you'll need like the Ernst & Young certified token security analysis thing. And hopefully some company will go and you'll be able to, especially it'd be cool for small business if you could pay 15 grand and have some uniform thing like H&R Block say, yeah, these numbers are real based on rough things of what we said. There's still going to be fraud and stuff, but you kind of really need computers to do this. And now what's neat is that you can drill that down into a world where you have at the top level all of these things trading, and then we can use the same principles. How do you know YouTube video is good? Because it has a whole bunch of people and a whole bunch of thumbs up. You can invest in that little restaurant in Syria, and when you look at the token, you say, okay, H&R Block certified, their financials are real, this is in this, and you can have people that do that. So you can have mini portfolio managers who manage their own portfolio, and you say, okay, this person's an expert on Syrian restaurants, and look at their portfolio and look at their track record. And then you trust them. And then your AI goes and says, okay, and that may only be 0.5% of your portfolio. Syrian restaurants isn't a major category, but they can go and do that, and you can drill down and use curators and data crunching, a lot of numbers like that, and you can override it yourself. You could say, I love this comic book store, I'm going to buy it. And, but mainly it'll be done by computers.
When we move images around the internet, we have standards like JPEG and GIFs and things like that. For exchanges, are there any standards to ensure interoperability and things like that? Amazingly,
no, and amazingly it's worked pretty well, which is what's incredible about this. There are 10,000 tons of standards to have this crazy, weird, complex DTC system to work. But anybody can create a token. That token I created on the YouTube video is a real token. You can trade any token. If you can convince an exchange to list it, they'll list it. And they'll list all kinds of platforms. Some of these are trading on Bitcoin. Tether trades on Bitcoin. It trades using the OmniLayer platform. You have tokens that obviously trade on Ethereum, tokens that are their own chain, anything. But the cool thing is, because the exchanges don't have to worry about the ledger, they can trust a distributed ledger. All they have to do is be able to see a blockchain. Another matter whether it's a good chain, whether it's a good underlying asset, and all of those things. But the trading is pretty good and pretty simple. And in the future, you're going to have decentralized exchanges, and you may not even exchanges at all, because and that's a great way to be subject to less regulation. Because if you trade peer to peer, if you had an Apple bearer share, it's very hard to have that now. Almost, I don't know if anybody does, but it would be possible. If Apple did a board resolution, you better believe that's real. If they give it to you, you have the rights to that, and you can sell it to him over here, and that's legal. There's no broker involved. Me, if I'm a broker and I facilitate that trade, then whole other story. AML, KYC, all of that kind of stuff. So peer-to-peer transfer is less regulated and much more exciting, and it's probably the way the world's going to work. So you can just trade all of these things. It'll look like an exchange, but it'll really be just trading with peers all around the world. Particularly I think there's going to be a whole bunch of small companies that do this, and they may never even end up on what we would call an exchange. It's just kind of a price discovery. And if it's a sandwich shop in Portsmouth, New Hampshire, you don't really care about price discovery. You're not buying that because you think it's the next Microsoft. You're probably buying it because you're a community member or whatever, or some sort of system.
So you talked a little bit about tokenizing assets on the Bitcoin protocol. And with developments like the Liquid network, I kind of want to hear your vision on tokenizing real-world assets and if it's viable to use the Bitcoin protocol or some other blockchain.
Yeah, our company joined the Liquid protocol. We're supporters of it. We're members of it. I like the Liquid protocol. I like the folks at Blockstream. I've been very fortunate to have known some of these people. I think they're very intelligent folks. I've known Adam back for a few years. I've learned a lot from him, but I'm cautious to say that because I say a lot of stupid things. I don't want anybody to give Adam credit for anything dumb I say. But they're very sharp people, and they care a lot about security, and they're very, very strong technical depth. And Bitcoin is a very, very strong chain. It's the strongest chain right now, and it certainly has the most network effect and depth. So for my company as an investment advisor, that's why we joined Liquid. Clearly somebody's going to use this chain. It's a good chain. We may use it for assets. There's a lot of other platforms. I don't think it makes sense for somebody to issue their own blockchain. There's EOS, Ravencoin. Anybody here last year for the Ravencoin announcement? A few? EOS, Ravencoin, ETH Classic, Ethereum, of course, with the ERC20 tokens. There's the Tari protocol on Monero. This is the other thing that pure maximalists are just utterly clueless about. This idea there's only going to be one chain is absolute folly. It's ridiculous, and I can prove it right now. All you need is any other chain ever to ever issue any asset ever that ever has any dollar value or any value at all. And now there's two chains. Do you think every single person on Earth will all use the same chain? It's just not going to happen. It's not reality. I mean, do you envision this world like, okay, now we reached a certain market cap. Charles Hoskinson and Roger Ver and Tron Black and Riccardo Spagni and everybody else all gave up. They're only going to use one chain. And all those assets on the old chains are all going to get deleted. It's preposterous. It's ridiculous. Certainly some chains will fail. They'll get crushed under scaling issues and other things. But there's going to be assets that trade on other chains. So other chains will exist. That's just the way the world works. So I think Bitcoin's a really great chain. I hope a lot of assets are issued on it. I'll probably issue assets on it. Certainly going to support it. And I'll support Liquid.
Last question.
Hi, what are some interesting projects you've seen in the last 6 months, to a year?
There's a lot. One of the most interesting things isn't so much a project, it's that I was talking about this 6 months ago when almost nobody had even heard of securities tokens. Now it's all anybody talks about, which is kind of interesting. A lot of the projects, I can answer it first by saying what's not interesting. A lot of them are just not interesting. They're kind of stomach-turningly not interesting. It's like, oh, we couldn't scam people with ICOs. Now we can scam them with securities tokens. And that's unfortunate. And there's going to be a lot of low-quality actors that get into it. But I'd say the most exciting things to me are, certainly Ravencoin and certainly anything decentralized, anything, decentralized exchanges. I'm really excited about the work that the major exchanges like T0, Gemini, Circle, Poloniex, Coinbase are doing. All these groups have clearly said that they're moving into this area. It's real, it's here. I'd say that's probably the most exciting. is that these major groups have made a commitment to that. That's very validating of this thesis. And when you have somebody like Coinbase say that they're going to do it, it's real. It's real. So that's the things I'm excited about the most. The overall space is very exciting, and the big picture macro that's exciting to me is certainly not replacing scammy ICOs with something a little less scammy that grows into something kind of mainstream. That's because eventually the scams get wiped out by free market forces. That's not that interesting to me. What's interesting to me is this long tail of 500,000 publicly traded companies and completely new structures, totally different than companies. You know, things like co-ops. Why don't we use co-ops more? How cool is co-ops? And with millennials and a lot of different other factors, other structures will appeal to people in the way that you can share risk in the world, in the way that you can trade and put your resources towards something, whether it's hard drive space or time that you spend. Those structures are really, really cool. And to be able to place value on them and trade them will be super, super cool. So a lot of cool things coming up. Thanks.